Hey everyone, welcome back to Corporate Decoder. Today we're diving into STONERIDGE's latest report, and let me tell you, it's a bit of a bumpy ride. We'll see if their promises actually stick or if they're just spinning the wheels. This report is about how STONERIDGE performed in the first 3 months of 2025. We're going to look at the good, the bad, and the confusing and try to figure out what it all means for the company and its investors. Basically, did they make money, lose money, and what's their plan to change things for the better? Alright, let's jump right into it. STONERIDGE put out a press release about their results for the first quarter, which ended in March, and on May 1st, their management team will be chatting about these results in a webcast using a presentation. This is where they'll try to explain all the numbers and tell everyone how great things are or will be. We're going to decode it to see the real story. Now here's where things get a little technical, but bear with me. The press release and presentation will use some non-standard ways of measuring their financial health. These are things like adjusted gross profit, adjusted operating income, adjusted net income, and something called EBITDA. These aren't your regular run-of-the-mill numbers. Why do they use these adjusted numbers? Well, the company says it helps them and investors compare how they're doing from one period to another. It does that by taking out unusual or one-time costs, things that don't normally happen. In 2025, these unusual items include costs from changing the business around and adjustments for keeping their debt in line. In 2024, it was similar but also included costs for cleaning up environmental issues. So these adjusted numbers are supposed to give a clearer picture of the core business. The thing is, you can't just look at these adjusted numbers by themselves. It's like only looking at the highlights of a movie. You need to see the whole picture. That means comparing these adjusted numbers to the regular numbers that follow standard accounting rules, also known as GAAP. It's important to remember that what STONERIDGE calls adjusted might be different from what another company calls adjusted. Everyone has their own way of tweaking the numbers. Adjusted numbers are not necessarily bad, but it's like seasoning a dish. Too little or too much can be detrimental, so we should check the original dish, aka GAAP numbers, and compare the difference. Lastly, there are exhibits included with this report. That means extra documents with more details. You can find the press release and the presentation slides there, and also interactive data files for computers to easily read the document. The company's stock, called Common Shares, trades under the ticker symbol SRI on the New York Stock Exchange. So if you're interested in buying or selling their stock, that's where you can find it. Now, I know what you're thinking. Enough of the setup, let's get to the numbers. Sadly, this current report 8K does not include financial tables or any numbers. It just mentions that they will be on the press release. That means this document just tells us about the upcoming earnings call and nothing about their actual performance. This is just a heads up that STONERIDGE is about to release its earnings. It's like the movie trailer before the actual film. We know the main actors, but we don't know if the story is good or bad. It's a bit frustrating. We don't get any hard numbers here. We don't know if sales went up or down, if they're making more money or losing it. We're basically just waiting for the real show, the earnings call and presentation, to get any meaningful information. So what can we take away from this? The company is trying to present itself in the best possible light by using adjusted numbers. It's up to us as careful observers to dig deeper and see if those numbers match up with reality. Are they truly improving, or are they just making the numbers look better? We'll need to wait for the actual earnings call and presentation to find out. Without any real numbers, it's tough to say definitively where STONERIDGE is headed. We need to see the full financial picture before we can make any informed judgments. What are the risks? What are the opportunities? This document doesn't tell us. Save the initial read on STONERIDGE's report. It's more of a teaser than a full meal. We'll need to keep an eye out for the earnings call and presentation to get the real story. Remember to look closely at both the adjusted and the regular numbers and think about what they really mean for the company's future. And thanks for watching Corporate Decoder. If you found this helpful, please give us a like, leave a comment and subscribe for more deep dives into the world of corporate filings.